Back with us today for our Trader Talk segment is Sean Udell, aka Tech Trader. Good morning, Sean. How are you?
Good morning. How are you?
I'm doing quite well. Thank you very much. So, last week you thought we might have put in the bottom. Today it may not have been the case. So, with that said, where are your sentiment rankings now?
Well, we finally have some interesting data from a sentiment standpoint. By the way, I'll give you props. You were more right on the near term of the correction. I mean, here's what I did. Hey, I basically called it at the top. We got 550 points. I kind of said that's enough for me. I guess we've kept going lower, but as you're seeing, I'm not really buying a lot. I'm not really trading a lot. I'm probably positioned more bearish than my thought process is, because I don't necessarily think we have to drop a lot. I mean, we dropped a lot on China news. In fact, I think we've kind of probably massively overshot on trade war fears. But that doesn't mean, overshoots are funny things. An overshoot can look kind of mild and then get very extreme. So, that's the thing, you never know. Like, I think a lot of people probably thought the market was crazy. The November low was a crazy low. Well, we went to the December low, which was a crazier low. Didn't last very long, by the way, but it was a crazier low. But yeah, I have some pretty good. I'm actually paging through charts right now, trying to get the first. I'll probably start with this. Okay, so there's I have my own sentiment scoring system where I blend a lot of these things, but I'll kind of talk about the piece parts. So the easiest thing, like, everybody can look this up, and it's a surprisingly good sentiment tool. It's a CNN Business Fear and Greed indicator. You can literally just type fear and greed in Google, and it'll come up. So they kind of do an amalgamation. I would say their system's a little, what's the word for it? It's a little bit of a brute force system, meaning it probably gets to extremes too early. So like they're showing extreme fear at a 25 reading. I mean, I've seen their low like 368, something like that. So to me, extreme fear would be the bottom end of that. I would probably more call this, fear. You know what I mean? Mm-hmm. So, but they're usually kind of like extreme bull or extreme fear. They don't spend much time in the middle, but it's still a good tool. It's still a good indicator. So that's an easy one. But the things I look at, I do a moving average. I do my own. In fact, I do kind of my own blend of the CPC. This is put call ratio. So we haven't seen like a particular day where the put call numbers have blown out, but they've been consistently. I think the best way to say it, they've been consistently high. On a rolling average basis, which is the way I've preferred to look at this, and I've done so for a decade or more, it's been pretty accurate. We're basically kind of blowing out the top, which basically means fear is spiking pretty massively on put call. Again, could go higher, but we're at readings where sometimes you get an interim overshoot or even a durable overshoot. So that reading's pretty conclusive now. Again, it could stay like this. Sometimes you get a reading kind of stays like that, and it's kind of an early indicator of something that might occur in like 2, 3, 4 days. But it's in the ballpark. The other one, I think this is one of my favorite ones long term, is looking at the percent of stocks above and below 50, 150, and 200-day moving averages. So, by the way, a couple months ago when I first started getting pretty bearish, you had a reading, for example, like the percent of stocks above the 50-day, and this is the whole NASDAQ. So how many of our stocks are in NASDAQ? 3,000, 4,000? I'm not even sure anymore. But we had a reading of 82. It took a while, but that thing has been sort of steadily falling since late February, early March. So like we've seen, what's happened as the indices have held or gone higher is a smaller number of stocks have participated. We know the group is basically cloud has replaced FANG. So, and this is what I talked about the last time we're on, is when you have a very small number of stocks holding up indices, it can be a pretty dangerous situation. At this point, though, we only have about 32% of all stocks are above the 50-day. That's not like that's not like a home run, no-brainer low reading, which, by the way, we hit a couple of late last year of 12.5 and 7.5. 7.5 literally is almost at like a historic low, a multi-decade type low. But 32 is kind of in that ballpark. I mean, I want to say in 2013, I don't know if I ever saw this reading below 25, 28. In fact, I don't know, might not have been much below 30. So in some markets, a reading of 32% of all stocks above the 50-day is actually a pretty extreme reading. I think it's fairly extreme short term. What's another factor here? NAMO. So this is my McClellan oscillator work. I think the same thing. They've been negative now persistently. So the cumulative ratios are falling pretty good and have dropped a lot from year highs. I kind of like to look at them both kind of on discrete and cumulative. The cumulative NIMO intraday, I always have to interpolate this, probably about minus 65. Again, crazy lows are in that minus 100, minus 85 area. Yeah, they have been lower, but we're pushing, minus 65, 70 right now. There have been plenty of bounces and even plenty of pretty good market moves that have occurred off readings at this point or slightly higher. I usually like to look at okay, what's the move from the high? So this is a very extreme move from the high reading, which again was early in the year. So I'll probably stop there because there's about 10 more I could talk about. They all kind of tell you the same thing: new high, new low, same thing. Got a big spike in new highs about 3-4 weeks ago. That looked like a very high. In fact, it matched the high of the 2018 high, by the way. And now new lows is starting to creep up. The low number, though, is way off, like where we had the late last year type numbers. But it's moving in the direction that you would expect when you kind of have this rolling correction going. But yeah, I mean, we'll see. Like I say, I'm not what I'm waiting for right now. I posted this earlier today. I'm just waiting for setups. I'm just waiting. I mean, probably the hardest thing not to do, especially if you're a professional trader, you're trading for a living, or it's a big part of your income, is to do nothing. But there's a lot of times that the best trade is to not make a trade. And that's kind of where I've been. I mean, that's kind of where I've been for, I guess a number of weeks now. I haven't really I've done a couple nibbles, I've chipped away at a few things, I've done a few, again, I'm doing some scalping trade on my own short term. Again, I don't post those on briefing. I've been doing a lot more of those. Like I bought pins. Literally, I bought pins I think 2 days ago, and I sold it in a day and a half and made 2 points. I've done a fair number of those, but I don't really see anything yet that tells me that I want to start firing and accumulating positions en masse. I just, I'm basically waiting for a turn. I think one of the very first conversations we had, one of the things I love to see how stocks react around 5-day EMA, so exponential moving average. And right now, the bounces tend to be weak, and stocks kind of bounce maybe kind of back to a 3 or a 5 EMA, but then they don't continue. So, I like to see stocks, when they're in this condition, and fear is rising pretty rapidly, I like to see a stock retake a 5 EMA and then not fall back. That's one example. A 9 EMA is a little longer term, although from a big sell-off, I mean, sometimes you need 15-20% to get back to a 9 EMA. Mm-hmm. So I like to use the 5, a 3 or a 5 for the early indicator. But that's kind of what I'm waiting for. I'm just waiting for a lot of stocks basically to show me that they can kind of trade back to like 5 EMAs. And sometimes too, you just wait for a higher weekly close. Or you wait for a day where a particular stock gets bad news and it just doesn't go down. So it's gone down a lot, you get bad news, doesn't go down anymore. In fact, those are my favorite bottoms. Those don't occur very often though. Those are pretty rare. Even on a stock by stock basis, you don't get very many clear cut. In fact, that was like the AMBA buy early this year, like 32 to 36. They basically missed and guided lower, and the stock was up the next day. And AMBA put on like 20 points. So, but yeah, I'm just kind of waiting. Stocks basically at this point need to show me that they can trade back to like a 3 or 5 EMA and not immediately get algoed lower when they kiss the 5 EMA, which by the way, we've seen a lot of that. Some stocks are kind of going up to a 9 EMA, kissing it, falling back. But like I said, the one area where I'll probably be the first area where I start being more aggressive in my position reaccumulation is same stuff, 5G fibers, Qualcomm, things like that. I think there's one area I think has almost become a dumb overshoot is stuff selling off on China news. And then the last thing I'll say, and I'll turn the mic over to you, is that we're also just seeing some weird reactions. And again, I think this is actually positive, not negative, but Nutanix dropping as much as it did on a downgrade yesterday, and there was a great question by somebody, and I totally agreed with him or her on, it was almost like a dumb late downgrade. Now, hey, if they miss and the stock goes 10 points lower, the downgrade won't look as dumb, but it's still a late downgrade. I mean, I got off the stock between 50 and 60 bucks and, kept it in my focus list from 15 to roughly 60. In effect, I downgraded my view on Nutanix, a year ago. So, well before they finally posted a quarter where they missed and dropped a ton. And so, analysts have had 18 months at much higher prices to downgrade Nutanix. I think a downgrade at 33 is pretty ill timed. Hey, we'll see. We'll see tomorrow night if it ends up being at least directionally right short term. But just the reaction, how much that stock dropped, to me again is more of a signal of maybe an extreme condition. Well, here's what I think. I think we kind of have a mini version of late last year. I think basically, I don't know if we have a ton of selling. I just think we have a buyer strike. I mean, I'm a buyer on strike. I think there's a lot of fund managers who are buyers on strike. I think there's just a lot of people who just don't really want to buy anything. So in the absence of buying, I think you get a lot of front running of any selling that is coming into the market. So you can have relatively light volume, and we've had some extremely light volume, and yet stocks go down a lot on light volume. Again, under the old specialist system, that wouldn't happen. If there wasn't really many sellers, stocks would hold, they wouldn't really drop. Nowadays, you don't really need a lot of sellers for stocks to drop a lot. You just need a few sellers with algos jumping in front of them with basically no buyers. So if you have a buyer strike, you can concoct a very large sell-off in stocks now. Which, by the way, that's a huge part of what last year was. You just had a massive buyer strike. Everybody was afraid to buy. So you had, this pretty severe multi-week sell-off, and I don't know if there was anything that severe, like from a fundamental standpoint late last year, aside from pretty massive overvaluation of, 10 to 15 names, which again, we have massive overvaluation of probably 10, 15, 20 names.
All right, so just back to where you were at the beginning of the conversation, talking about your sentiment reads and some of the things you were looking at, that you've seen some extreme levels that would indicate that we are getting to a place where you would think that you'd be on a little bit maybe shopping for some names, right? Is that
yeah? Fair? I mean, put it this way. I think it's fair to say I'm getting more. I mean, honestly, for like 2-3 weeks, I've almost kind of been on a partial vacation. Been working out a lot, golfing more. Just haven't really. I mean, put it this way. The one rule I kind of live by, if there's not really any discernible setups, I'm not going to put trades out there. I might put some feelers out there. I started building a position in light. Again, I didn't like light at highs. Started buying some of that a little bit early, but I'm never going to time bottoms correctly when I'm building a position. And so I started building a position in that. I was completely out of the name. Hey, 48 to 50, 14 off highs, that's okay. Bought a little more at 44, looking a little more now. But that's a pretty good quality company long term that I think set up very well. So I would say they're in an overreaction. As far as extremes, I don't know if I think the way I'd say it is we're not at extremes. A lot of times you don't get a no-brainer extreme. I mean, like the December low extreme, where we had numbers that literally we've only seen a few times in the last couple decades. You know, you literally had, in fact, like the 2011, we had one or two of my sentiment numbers were literally matching the 2011 lows. So that's a good example. I mean, so you had a low that you didn't see in a sentiment measure you didn't see for 7 years. So that's super extreme when you have like 5-10 year type lows. But what I'd say now is we're at least probing sort of sentiment numbers that they're low enough that I've seen many big. I mean, again, 2014, 2015, 2013. 2016 type sentiment numbers where you don't get a crazy low, you just get a big drop from a prior high, and you've worked basically you scrub enough people out of enough stocks that buying comes back in, right? In other words, once you get to the point where the algos can't easily make money on the downside, guess what they do? They flip. Again, I don't dislike algos at all. I love them. Because it's once they get to a point where it starts costing too much money to keep moving stocks lower, and it's cost less money to make them go up, they go up. So I think we could be kind of coming close to kind of one of those points. I mean, here's the sentiment numbers I'm seeing. Remember my correction calls, the first two correction calls last year, they both ended sort of similar sentiment readings that we're seeing now. That's probably the best way to say it. Doesn't mean we can't go lower. Doesn't mean sentiment numbers can't go lower. But most of the time, again, since you only get extreme lows like every 5 or 7 or 10 years, you're typically not going to get those kind of lows every year because, again, they only occur very infrequently. The numbers we're seeing now are numbers you see, you might see 2, 3, 4 times a year. So they're getting stretched. But they're numbers that you see at least 2 or 3 times a year, typically.
All right. So under that case, why don't you give us a couple of names that you either are very much under-owned or a couple of new names that you haven't dove into, that you don't have an established position that you're snuffing out right now?
Well, I mean, we could talk a little bit about Nutanix. I mean, I like it for a short-term trade.
And you currently don't own this one.
No, I do. I have a small. I bought this. Yeah, I bought this at 34, sold half plus 42.
Okay.
I mean, that's all posted on briefing.
Sure.
So I'll probably carry that small piece into the print. It might work a little bit higher before they print. But that one, I mean, so this one, I guess I'm very interested in it post print. One, do they not drop on a bad report? I.e., so let's say, do they have a report that in some way is disappointing, but they don't go lower? That would set up an AMBA type trade. Or do they actually have a pretty good report and it sort of has a tepid response for a few hours? That would probably get me pretty interested in the long side. Nutanix could have a very, very interesting setup, and here's why. You have Palo Alto. Well, first of all, you have Splunk down 20-25 off good numbers. They weren't great. They actually showed some deceleration. I said a long time ago I had no interest in being long Splunk at highs. It's quite a bit cheaper now. I don't know where I would buy Splunk, but it wouldn't be here. But you have, just tonight we had Palo Alto reporting. We had Workday. Workday is about $20 off the after hours high last night. Again, some people celebrated those numbers. I thought they were solid. I've definitely seen Workday report far better quarters than last quarter. Second derivative growth is kind of slowing. Again, that's going to be the theme, I think, for most of these cloud stocks. Anyway, you have Palo Alto Vive tonight. Vive's just incredibly, incredibly expensive. So, hey, do those stocks drop on quote unquote good numbers? Tomorrow you have Okta, Nutanix, VMware, Zscaler, ZUO. By the way, I do like ZUO. Still like ZUO. So Nutanix, ZUO are names. Pivotal, Cloudera are names I like. They're undervalued names in the cloud space. But if you get a good report out of Nutanix, and you get a bunch of reports, forget about the reports. Let's say you have a bunch of negative reactions on the most expensive cloud stocks. that might kind of put some reins on Nutanix. But you could set up a long in Nutanix a couple different ways. It doesn't mean I'm going to buy it. Doesn't mean I'm going to increase my position, but at least I'm prepared to. Hey, if it's a bad report and the stock's down $3 or $4 or $5, I'll probably just give it 3-4 day rule, see where it settles, stuff like that. Honestly, this is one, I've had a lot of reports where I've basically had high conviction, had very high conviction on several shorts, had very high conviction on many, many, many longs over the last couple of years. Nutanix, honestly, it's kind of a coin toss. I would be very surprised if they had a report as bad as last quarter, because last quarter was a bad report that was out of nowhere. A lot of people thought they were going to report strongly. So it should be pretty easy to have a better report than their last quarter's report, but that doesn't mean it's going to be a report that's going to really bring buyers into it. If it's kind of like an inline type number, I don't know if the stock would really spike a lot on that. It might bounce, give up the bounce, Again, we just have to kind of see how it trades. But if they do have a good report, and the commentary is strong amid a bunch of other cloud stocks dropping, that could set up as a very interesting long, very interesting sort of against the grain long. Again, let's talk. Light. I think light is very interesting. Again, I'm usually on the other side of the trade on this. So when the bulls love it, I usually don't like it. It served me pretty well because I tend to like it when everybody else they find something they don't like about it. It drops. I'll fully admit this. I'm very surprised. It's almost exactly at the same price I bought the stock earlier this year at $41.80. And I'm literally, when I was buying it there earlier this year, first I felt very lucky because this is one of the stocks I didn't buy in November and December. And I was able to grab it, I believe, in early February at a price that wasn't much off those November lows. And honestly, I was buying a price like I'm just not sure we're going to see 42 or lower again this whole year because of everything that's going to happen with 5G. So that gets me back to Huawei and this extreme selling reaction we've had on Huawei when in fact, no matter what happens with Huawei, it does not change global end market demand. It could delay some deployments. It could change some things for China, how China upgrades, installs, deploys for a period of time. Probably a few quarters. It literally is not going to change hardly anything for North America, South America, Europe, Japan deployments. Has very little impact on most of the rest of the world outside of China. So I feel very good about building the position light. You're never going to catch things at perfect prices. I'm willing to keep nibbling at it. 38 would just be crazy in my view. Again, I would basically be back to December lows. We're kind of sniffing at some of those prices right now. So let's talk a little bit more about Huawei. So, I like the expression I think some of us like to use is, the market can't have it both ways long term. It can short term. So it's having it both ways short term in that, okay, so the suppliers to, let's say the 10% and greater suppliers to Huawei have been hit pretty hard. Well, interestingly, so have the under 10% suppliers, and so have the under 3% suppliers. And in fact, so have the companies that will benefit the most if Huawei is essentially curtailed from doing business anywhere outside of China for a long time. So the companies that are set up to probably do the best, if let's say Huawei is sort of permanently curtailed to some degree, CommScope, Adtran, Cisco, Juniper. Again, I think Qualcomm's not very dependent on Huawei. Qualcomm set up beautifully for a multi-year 5G upgrade cycle. So what's interesting is you've seen the declines, and I'm just gonna kind of mention two, Adtran and CommScope. They've both declined quite a bit. Adtran itself had a very nice quarter, so I think second or third good quarter in a row. They are literally picking up business. In fact, the last conference call, they talked about the fact that they're gaining pretty good share already against some former Huawei deployments in North America. And CommScope is set up to pay. They're just a much bigger company. It's a combo now of CommScope and Aris. So they're set up to pick up even more incremental business from Huawei. Because again, Huawei's been a big thorn in their side because Huawei sells very cheap solutions. So yet the market's not repricing the benefactors higher. It's sort of taking everybody down at the same time. So that's why I think some of this is just a dumb reaction. So dumb reactions can last a while, but they eventually unwind, and when they unwind, they can unwind spectacularly. So probably one of the positions I'm kind of getting the most interested in as a new kind of investment long would probably be CommScope. Again, I like the fact that they're combining two pretty darn good companies into one. There's a big synergy story there. There's a ton of earnings power. Stock's just sickeningly cheap. I mean, it was sickeningly cheap at 20. You also had a ton of analysts kind of almost mysteriously upgrading this name. I mean, I ahead of last quarter, I didn't think that COMM had a particularly powerful setup or anything for an earnings production standpoint. They basically missed the quarter. It was a minor miss, by the way. It wasn't a bad report, but they missed. They guided modestly lower. Well, you had all these down upgrades between like 22 and 26. Stock 16, 17 now. I haven't seen many downgrades. I think you're probably going to get pretty close to where those guys start defending the stock pretty vigorously, because there's a huge bullish thesis here. If Huawei is in any way, even partially, permanently curtailed, COMM's going to pick up a ton of business. And that's just not North American business. It's North America, EU, maybe Japan, pretty much wherever they are. So that's a weird, strange reaction. Acacia, very weird. Again, 1% or less to Huawei. They've pretty much gotten hit in this as much as anybody. They had a good report. So you're kind of in this phase where it's shoot everything first, and then I guess evaluate who stands up out of the grave first or something. But we've seen these kind of sell-offs before. Once they get to the extreme point, I would say COMM's getting pretty extreme. Again, what was here, let me look. December low on COMM was 15. The stock traded as high as 27 almost, just weeks ago. Pretty interesting. I mean, it's not at December lows yet, but I think this is hugely overshot. I actually thought it overshot on the report. I think it went down too much on a mild miss. They have plenty of good things to say, had good commentary, good forward commentary. I think this is going to be this is a massively good deal for COMM long term, the fact that they bought Eris. So anyway, that's probably sort of a name that's kind of front and center of something that's new.
All right, so COMM is on the list. LITE, we've talked about that one a lot. ZUO, mm-hmm. Do you own ZUO?
I do. Same thing, small position. I think it's fair to say I probably like Pivotal quite a bit more, so I probably own Pivotal in 2 or 3x the size that I own ZUO. But ZUO is, again, very, very nice long-term business model. Again, we'll see. I mean, this could be kind of like that Nutanix setup I described. Like, let's say these guys have a good quarter, the typical good quarter. They don't really blow numbers out, but they tend to kind of beat and modestly raise. Like if this were to get hit on again what I view as a good report, this is one I wouldn't be afraid to increase my position into weakness at all, especially if I like the numbers. So same with Pivotal, same with Nutanix. I mean, so that's kind of what I'm seeing. I'm just seeing, hey, do they produce reports I like? Do they produce numbers I like? I don't really care what the market thinks. If the market gives me a good buy on a report I like, then that's my kind of setup. Now, the only rule I might be breaking or bucking a little bit is I do think most of my buys, I'm at this point, I do both fundamental and technical work, kind of view both equally important. I think fundamentals are far more important long term, but from a short-term trading perspective, I think both are equally important. And I do want to see stocks fight back. I do want to see stocks show they have some fight. I want to see how things react on some of these early EMAs. I want to see stocks start producing. Again, really, I want to see them hold on bad news. That's the best. I'd rather see a stock hold on bad news than rise on good news and then fail. So, or at least show some fight. By the way, today's stocks are showing some fight. I mean, there's been plenty of pretty decent bounces off of lows. The Soxel, which I do trade this too myself, especially short term. This thing was 200 not that long ago. It's 107 now. Hit one. I think the morning low was 103. But I mean, Soxel at one point today, this was $6 off the low, and this is 3x levered semis. And if you listen to the media, semis are dead and going lower. So Soxel showing some fight. Again, I think we're pretty close to a Qualcomm reversal. I really do. Hey, I'm not afraid to make a call, and when I make them, they're pretty firm. I'm gonna say, 65. I mean, I was one of the few guys that loved this thing at 51 and lower, and so to me, what's the new 51? I don't think 51 is the new 51. It wasn't 70 because 70 didn't hold. It wasn't 68 because 68 didn't hold. So I think we're getting pretty close to a price where Qualcomm's going to hold. So 65 could be the new 51. Maybe it's 62.5 or 63. Maybe even 61. We don't know. But it's green right now. I just looked at it. So it's green right now. It's showing a little bit of fight, but it's not fighting a lot. But I mean, this is a very severe reaction. Honestly, I mean, this is kind of one of these things. This is a double whammy. I think a lot of people think, well, this is all down because of the FTC. I actually think this is probably down. If you were to split the total decline, I think it's about 50-50. I think it's 50-50 FTC, 50% kind of Huawei / China trade stuff. So I think if the China trade thing had not happened and all we're looking at was that FTC case, there's already been plenty of opinion that the FTC case, is either outright dumb or people are misunderstanding the interpretation of it and the business implications to Qualcomm, et cetera, et cetera. But yeah, I think this is kind of a double whammy. I think you got, if you want to just split it up and say, look, it's down 20 points plus off of highs, I think you can basically say, hey, half's the Huawei / China trade, half's FTC. But I definitely think Qualcomm's overshot. I don't know. That doesn't mean it's hit a durable low, but I think it's starting to get closer to that point. Maybe today is. So I don't know. This one feels like it's pretty darn close to a reversal point.
All right. Well, Qualcomm was my next question because we talked on Tuesday, and it was that evening that the bad news came out. Stock gapped lower. Have you dabbled in getting involved anymore? Or are you just already at full size position in Qualcomm?
I think I've bought a couple calls, very, very small, just kind of dabbling with a couple calls a couple different times. I haven't latched into kind of my next big investment. I mean, my last big investment position on the call side was the June 60s. I like the Octobers. I like the thought of January. I honestly haven't decided. So I just put some kind of shorter term call exposure just to it's almost like a hedge in case some good news comes out and the thing spikes. I have a way to participate. I still have my common. I haven't sold any common. But this is one, my big score was really more on the call side than the common. And I'm kind of starting to nibble, but I haven't. I think I'm going to go Octobers right now, although I might go longer. And I'm going to set it up the same as I did last time. If you remember last time, my view was, look, I'm going to use calls / leaps as a replacement for common. I'm going to view these as this is going to be like a 12 to 18 month strategy position. So that means, hey, if I have 3 month or 6 month calls, if they don't work, I'm going to buy more. And I'm going to either get the same strike price or a lower strike price. But basically, my intention is basically from where Qualcomm's lows were, I thought the stock was extremely undervalued. I thought there was a huge opportunity for a big move higher. That all proved correct. The June 60s were massive winners. So I'm going to kind of set up that trade again. I haven't really done it. I've only done it, again, like I say, I've got some short-term calls as almost like just a hedge because I don't have my long-term calls in place yet. I'm still kind of looking. And frankly, it's kind of the same. I'm just kind of waiting. I'm kind of waiting for, Qualcomm to show me, that it can produce a higher daily close, or it can get back above a 5 EMA, or that, hey, it's not just going to gap up a point and then give it all back. So again, today is probably the most constructive day I think that we've had on Qualcomm in quite some time. Like I say, I don't know. I mean, there was I think somebody, I haven't read some Wall Street Journal article that somebody was basically defending them and saying that the judge's decision was done. Well, hey, plenty of people have already said that. Actually, but the best note I've seen on this is Morgan Stanley had a note talking about essential patents versus non-essential patents. And in effect, the essential patents is kind of what the judge talked about. And Qualcomm's already lowered pricing for essential patents, like to China, Korea, U.S. and Europe, and a lot of other entities. So, most of their contract negotiation with Apple and other large companies for their royalty streams have to do with. By the way, are you still there?
Yeah, I'm still here.
Oh, okay. So I just didn't know if you dropped for a sec. So have to do really with monetization of non-essential patents, which is where the bulk of the R&D in recent years has gone to. So anyway, if somebody, I would encourage anybody who's interested in Qualcomm, especially on the long or short, to check out that Morgan Stanley note, because I think their view of the sort of the judgment, the particulars, the monetization of current contracts versus any renegotiation fears and things like that. I think their view is basically the best, the most specific, if you will. There's a couple other good notes too, but I would say that the note they put out, they put 2 notes out. 2 notes they put out last week, I think are pretty good work. In fact, almost I would basically call it excellent work on the situation. So again, I think it's an overshoot. Doesn't mean it's going to go straight back to $88 because you do have an overhang on the stock now. But I don't think there's anything in that settlement that really impacts earnings. And I think that the one thing people are missing is that this is probably one of the few stocks that has a pretty easy earnings setup going into the next few quarters. So, and I think that's what will ultimately help. I mean, does Qualcomm get a stay? Do they get that decision overturned? I mean, we'll see. By the way, I do think, I'm not one to try to game legal stuff. If you remember, I didn't really have much banking on that legal decision before. I was banking on the fact that at 51 and lower, or really anything mid-50s and lower, Qualcomm's just absurdly cheap. And so, they got a big settlement that proved out. I think we're kind of in the same situation again. The stock's cheap, but it's just not stupidly extremely cheap as it was. This is a pretty good pullback. So again, I've got some kind of placeholder calls. Again, I'm looking at Octobers, I'm looking at Decembers, I'm looking at Januaries, whatever. Once I figure out where I am and get that position on, I'll post it. But I honestly haven't. I'm just kind of waiting. Put it this way: if the stock turns and shows some fight, and has a couple higher daily closes and is back at 66.50 or 67, I'm not going to, those calls aren't going to be much more expensive. So like I say, right now I'm just kind of waiting. I'm just kind of waiting on most things. I'm kind of waiting on, aside from short-term trades, and here's another one I like a lot, Stein, STNE. It's probably at about my cost right here. Same thing, everybody loved this stock at highs. I didn't. They actually had pretty good quarters. In fact, I really liked the last report they had. Really good growth numbers there, and the stock's getting cheaper every quarter. They produce the growth numbers, and the stock doesn't go up. So, that's an interesting play. I mean, honestly, we could almost be going into, one of my buddies kind of called this, are we going to just go into a dartboard market like we basically had late last year? What I mean by that is we'll probably get to a point where just tons of things will be really cheap and have overshot, and you don't have money for all of them, but you just do your best to pick a few of them. And then when they go up, there's a lot of things you're going to want to buy that you're going to miss because everything's going to go up at the same time on whatever the catalyst is. I kind of think we're kind of approaching kind of something like that. Because again, aside from 8 to 15 cloud names that are absurdly expensive, a lot of stuff's had pretty good corrections and pullbacks from highs.
All right, just a couple more that I want to touch on. Western Digital, have we reached a level that entices you yet?
I actually think we have. I don't know. I always look at everything relative to literally a basket of hundreds of other companies. So, Western Digital at 39.40 is not as attractive right now. I mean, again, Qualcomm's gotten beat up. I mean, I'd have to kind of go back and see what were the prices of other names I liked when Western Digital was last 40 and under. I don't think Light was this cheap. I know BIDU wasn't this cheap. You know, so I know CommScope wasn't even anywhere close to this cheap, or at least don't think it was. Or if it was, it wasn't really on my radar, and I favored Western Digital at the time. So anyway, to me, it's not, put it this way, the only reason it's not as good of a buy as it was the last time at this price is because I think there's probably more stocks that to me are more attractive, especially from how they're going to produce quarterly earnings the next 3, 4, 5 quarters. So again, the area that's probably been victimized the most, that has a pretty clear cut, you know, earnings and revenue growth path for the next 2-3 years is kind of 5G fiber optic names. Again, you could have a quarter or two of sort of uncertainty, and some numbers get moved around a little bit because of Huawei, especially for the guys who are 10+% Huawei suppliers. But I mean, there's a pretty easy road there from sort of an earnings growth perspective. Western Digital benefits from some of that stuff, but it's not as clear cut. But yeah, I do like it. I mean, I don't want to say I don't like it as much as I like the name the same I liked it before. The difference is there's more options, there's more targets to buy now. So on a relative basis, I don't know if I like it as much because so many other things have gotten cut down. I mean, even Nutanix, again, like let's say Nutanix reports well and stock's not really up much. I mean, this was a name I really, really liked when it was cheap, and this thing went huge. You know, Western Digital doesn't have near the long-term growth profile of a Nutanix. It's more of a cyclical growth profile. But I don't know. Long story short, I do like it relative to other things. It may not come back into kind of my buying crosshairs, just because I'm kind of looking at other things. I mean, here's one. Okay, Skyworks. Okay, Skyworks is about back to where it was when literally one of my biggest regret no buys of the year was Skyworks in the low to mid 60s. Hey, this thing's 68, and you were giving me a hard time not buying it at 70 on a breakout, and you were right. You were 100% right. The thing catapulted higher. Now I had plenty of exposure that kind of benefited similarly. But hey, I mean, this I don't know if I'm going to buy Skyworks either, but Skyworks 68 is very attractive. I really like this name. So we'll just have to see. I mean, DICOM, DY, another stock, had a huge spike on a very good earnings report. That's had a big pullback. I mean, the thing hit. I'm not quite sure who the 57.70 buyer was that day. That was probably a pretty bad buy post report, but. Hey, whatever the high was, this thing's had a hell of a pullback, and that was a real nice report. This is a very, very undervalued stock. So that's the thing. I mean, there's just tons of cheap stocks right now. I still can't say I don't love the market. I do think there's market risk due to whenever the cloud stocks decline, but there's plenty of cheap stocks that may or may not go down when the cloud stocks go down. Maybe what these stocks need is less buying in the cloud names, and monetary capital comes into the cheaper stocks. I mean, it's kind of what happened when FANG imploded. Plenty of money found its way to plenty of my names. So I kind of think the same thing's going to happen again. I basically think it will. So the timing, we just don't know. We just don't know what's going to happen. But yeah, no, there's plenty. I mean, here's one. I don't like featuring penny stocks because some people just have impulse control problems when it comes to penny stocks. But a stock I do have a position in, I've written about this a long time, it's underwater, is Infinera. Infinera has actually had a lot of good news. This would be another one. Infinera, I would say, was sort of a victim of Huawei for probably the last half decade or more. And I'm not saying that they compete directly with them, but there's probably some contracts that Huawei got because they're selling gear cheaper. So they didn't want to buy the Infinera kind of Cadillac super high-speed solution, and they decided, well, we'll get by with Huawei patchwork upgrades, right? Same thing. I mean, they've had tons of insider buys. I still go back to that last. Now, the numbers were not good on the last report, but they kept full year guidance relatively in line. The commentary, the senior management was definitely positive. They laid out a pretty good path for better numbers going forward. I would say they're set up to gain a lot of business, again, if Huawei is even partially permanently curtailed. And yet this stock has gotten absolutely zero lift off all this negative Huawei news. And again, it's just like I say, that's sort of one of these absurdities, is that, you know, the market can't really have it both ways. It can in the short term when there's no buyers for anything, because everything just gets pushed lower. But that's a clear benefactor. So, hey, if Huawei comes back and they're able to do everything, then Infinera's got to compete with them long term. And I still think the story's okay for a decent move higher. But Infinera will definitely gain more business if they don't have to worry about Huawei as much. Yet, that hasn't benefited that stock at all. So, I mean, like I said, there's quite a few of those out there. Ciena's another. I haven't done. Ciena used to be a huge position for me years ago. Did very well in it. I didn't really do much on Ciena this time around. But even that, you know, Ciena's a clear benefactor if Huawei's long-term curtailed. Ciena doesn't look like it's gotten any boost from this China stuff, this Huawei stuff at all. So these are the things I'm just kind of looking at. I'm just looking at, look, what makes sense, what doesn't. As usual, most things don't make sense with stock prices. I'm not a believer that stock prices contain all available information and are perfectly priced at all times. In fact, I kind of believe 180 degrees opposite of that. So, you know, there's a lot of opportunities. It's just a matter, though, there's got to be some willing buyers out there. You can't just have a free fire zone for, you know, short selling. And that when you go into a buyer strike nowadays, it kind of just opens up a free fire zone for shorts. So until that, I guess the phase is over, you know, stocks are going to do whatever they're going to do. And then once that phase is over, then we got to see, okay, what winners emerge and what stuff moves and what stuff makes the early turns the fastest. What can we swap into and stuff like that. But I put it this way, I'm probably more enthused about stocks now than I've been for at least 2 or 3 months.
All right, and this is the last one. I got to ask you about BIDU because everyone's asking me about it on the feedback. So let's talk about this one. Currently trading 112.70. What's your next buying zone?
I'm same thing. I'm kind of just waiting for a turn. I mean, I could keep nibbling kind of each $5 lower, but it's sometimes just easier just to wait. So, you know, I don't need, I already got enough, and at least at higher prices. So I've got plenty of room to buy more. So hey, you know, to the degree I can time, you know, my next 3 or 4 buys as well as I can, you know, that'll help offset, you know, the cost basis that's higher than here. But really, my short. I think I've talked about this. My mode at some point is going to be kind of a trade first and keep pieces. Meaning, you know, once this thing decides that it's broken the downtrend and starts posting trades, this should set up very similar to how I traded Apple or Google or even Western Digital or many names in years past, where, you know, you get a firm low, you start getting trades, the trading range starts expanding, you know, you go from, you know, max fear to apathy to disbelief. The disbelief phase is when the stock starts going up and nobody believes it's going to go up. So then it goes up a little more, the trading range broadens out, the trades get bigger and more profitable as the range expands, so on and so on and so on. But I mean, hey, there's huge gaps above to fill. I don't think fundamentals, my fundamental view hasn't changed one bit. In fact, my fundamental view is there's more upside now from 112 than there was from 162 or 172. So, you know, it's still not a huge percentage loss. I'm not gonna say I love the fact that I bought what I did, but sometimes you just buy stuff high and you have to kind of eat crow on it for a while. But I mean, hey, I had, you know, my largest position right now and has been for a while is Twitter. You know, I'm certainly glad I didn't panic and sell Twitter at lows. So, I mean, it's, I'm carrying a lot more Twitter simply just due to price appreciation than what I originally bought. And so, I don't have a lot of fear that Baidu will become a winner. I just don't know when that's going to occur. And at this point, I'm very content just to kind of wait on it and let it kind of show me. It for about 3 days. It was almost kind of fighting. There was some pretty bad market action where it didn't go down, but it also took a lot of pain when there was better market action. So, I mean, this is clearly this is a huge overreaction. But we'll just have to see. Like I say, there's plenty of tech stocks that have been down 20 or 30% and ended up making 2 or 3 or 4 times my money on. To me, this is I've said this 100 times. I'll keep saying it. I guess people haven't listened, but this is very similar to kind of my Apple position where I re-engaged with Apple in 2013. I didn't bottom tick Apple. I mean, I was buying some Apple at least 100 points too high, but that's one of the single biggest winners in my life. My 2013 Apple position. So it didn't start out as a winner, but I kept building it, kept working it, kept trading it. The one thing I would like to see on Baidu, but this same thing happened on Apple. It took weeks to months until the lows were set. Same thing, had a show that was done going down. The early moves higher were shallow. There was a lot of disbelief. There's a lot of people trying to chunk it out for literally, I mean, it was a $400 stock. People were trading for 2 points. So, the range had to expand. And probably people didn't believe Apple was a good stock again until it was a $550 or $600 stock. And by the time it was $600 stock, I was sitting on massive cushion on it. And so, people probably won't believe Baidu is a quote-unquote good stock until it's a $200 stock. And from here, that's a lot of upside. So, my position hasn't. I'm just waiting on it. Hey, if I thought it was the best trade right now, I'd be posting trades.
All right. Well, that's a good place to leave off for now. We do have a few earnings that are on deck. I believe Nutanix, Vive are just a couple that are coming out.
Well, here, let's run through them. We got Keysight. That could give maybe Qualcomm a little bit of love. There's some 5G, kind of exposure there. I think that's been a little over. I mean, again, this was one of those names people. In fact, I think we got a question on this, and I think I said I didn't like it at 90, and it's 71 now. So plenty of things have gone down. And by the way, here's something you can't look at Baidu without looking at almost every Chinese stock. I mean, look at WB, look at Sina. By the way, Sina is I'm looking at Sina as an investment long. Sina is literally trading. If nobody wants to believe me, go look at the balance sheet. I'm 100% right. But Sina's trading at less than 1 times net cash plus investments. So I love Baidu at like roughly 1.6, 1.7x. Sina's literally trading less than the balance sheet value of the company. And people say, well, that can't. Well, this happens a lot. I mean, I was buying Yahoo in 2012 at $12.50 when I could easily calculate a $45 value on the stock. And that's pretty much where it ended up going. And but the Sina, people say, well, their investments on the balance sheet must be wrong. No, they own a huge chunk in WB, Weibo. So they owned, at one point, they owned 65% of Weibo and 35% was owned by Baba. So, so Sina literally is trading at less than 1 times net cash plus investments. That's a pretty good opportunity. I haven't bought it yet, but I'm looking at it. I watch it every day. I last owned Sina in 2016. It was the last time the stock traded at this low of a valuation. So you can't, whether it's Sina. I mean, Sina was 92 or 100 not that long ago. WB has probably been more than cut in half. Who was another name I like? IQ, which is like 55% owned by Baidu, has dropped a lot. I think IQ has a huge growth runway. By the way, most of Baidu's net loss that everybody made a big deal of last quarter is because they're putting so much money into IQ. I actually think that's a good thing, not a bad thing. But I'm starting to look much more aggressively at Chinese stocks. Chinese stocks to me are a lot like biotechs. Don't really like them, but there are times I feel very compelled to buy them, and I do, because the valuation just gets so compelling that I literally make myself buy them. So I'm increasing the number of Chinese stocks I'm analyzing and looking at. I think there's a pretty massive overshoot with Chinese equities right now too. I probably won't feature that many of them. Again, with Sina, you basically get WB for free in effect because if WB were to rocket up, that would probably help Sina. Sina's got a good balance sheet. And this is not SYNA, the chip stock. This is SINA. Mm-hmm. Both pronounced the same. So, but yeah, I mean, you literally have a large, multi-billion-dollar Chinese company selling at less than 1 times net cash and investments. In fact, the discount to that's pretty big. I think it's about a 20% discount to net cash right now. So that just shows you how extreme. Again, China's not been this extreme very many times in its history. The lows in 2015 it was. The lows in 2016 it was. I'm trying to think of another stock. I can't think of the name right now. There's another Chinese stock I found, same thing, trading very, very cheap to balance sheet value. So yeah, but tonight we got Keysight, Palo Alto, Semtech's chip, Vive, one of the most expensive cloud stocks. Tomorrow you've got, I think Costco could be a market mover in general. You got Dell, Marvell. By the way, NXPI bought a division from Marvell. I think that's very good for NXPI. But you got Nutanix, Okta, Uber, VMware, Zscaler, ZUO. So the next 2 days, I think we're going to get a lot of information on software. I think this will be, 2 kind of key days for the market.
All right, well, that gives us a lot to talk about next week. So as always, Sean, thank you so much for joining us today. Always insightful.
All right, take care.
You too.